So it's been just a few days since the last video about Clover Health stock, but it's just crazy what is currently happening, performing another half the yearly return of the entire stock market. But this also means that we're going up again since the recent pullbacks from its incredible 224% jump in price, currently sitting at about $13.50. So what we are going to do today is give you an updated insight into what is happening to Clover Health stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so in order to figure out whether Clover Health Investments is a stock to buy at the end of this video, we first have to take another look at the company itself. And as we are looking at one of the biggest Medicare Advantage insurers in the United States in the case of Clover, you know that it's gonna be good. And the special thing about Clover is its proprietary platform called the Clover Assistant to improve outcomes for its members while effectively storing and processing patient records to train the machine learning algorithms behind it. But let's start by taking a look at the first initial run-up to all-time highs and the reason. And instead of soaring on news, this spike seemed to be driven mainly by investor sentiment that recent short seller attacks aren't as bad as they seemed and that Clover Health is a prime candidate for a short squeeze. At that time, almost 36% of Clover's float was sold short, making it one of the most heavily shorted names in the market. And as we've seen this sort of scenario play out extremely well for retail investors, especially on stocks like AMC, retail traders took full advantage, making the stock skyrocket in just a very short amount of time. Indeed, suggestions that there could be some sort of orchestrated squeeze appears to be enough to move any stock these days. And although it got shorted down again afterwards, the medical insurer continued to grow its business at an impressive rate. With all the negativity surrounding the company, the stock then traded at a significant discount, especially in regard to the just mentioned growth. In the past year alone, the penetration of Clover's Assistant amongst existing members was at 56%, representing a whopping 43% increase on a year-over-year basis. As mentioned before, the company also has a massive geographical reach across more than 100 markets in 7 different states in the United States. And if we take a look at the recent first quarter earnings report, it came in ahead of analyst estimates again as well. The company made over $200.3 million in revenues during the quarter, representing a 21% growth to the year before. And with massive expected members growth as well as revenue being predicted to fall in the range of $810 million and $830 million, a continuation of this growth is certain. Additionally, Clover Health stock still isn't expensive at all, trading at 6.76 times revenue, which is a reasonable price to pay for good revenue growth. But until it can find a way to turn a profit, it will consistently consume its $720 million in cash balance raised mostly from IPO proceeds. Nevertheless, Clover Health definitely has all-in potential. And as soon as the company can generate more positive net income, that will also catalyze more short sellers to begin covering their positions, leading to an even better risk-to-reward ratio. So Clover Health continues to grow its top line, despite being targeted by bears. Its strong revenue growth in the first quarter and last year pretty much proves its potential to rethink the idea of an insurance technology company. First, however, it needs to focus on improving its margins and carving out a path to true profitability in time. As said in the last video, for now, though, it's about building its business and taking it to the next level. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.